Hi, Mike Richardson here, owner of the Mortgage Marketplace and Marketplace Real Estate. And I wanted to get this video out to you because I wanted to introduce you to my compensation structure with my mortgage brokerage. It's simple, it's a subscription model. I've got a similar subscription model through my real estate brokerage as well. I'm going to refer to that a couple of times as I'm walking you through this to get more detail on the real estate brokerage subscription model. I put a video down below, so just take a look at that after this. But getting back to the mortgage company model, it's pretty simple. It's a $500 subscription per month. There's no long-term contracts. It's just month to month, and basically you put. I'll send you a link to my Stripe account, and you input your credit card information in, and we put you on a reoccurring billing cycle, on a monthly reoccurring billing cycle for $500 a month. You get all of the basis points. I'm 100% wholesale, so I don't have any correspondent lines of credit, which means I'm not marking up the rate sheets at all for my profit margin. It's 100% wholesale, and so you get 100% of the basis points for whatever bucket that you choose. So, whether that be a 100 basis points bucket, if you want your comp plan at 125, 150, 200 basis points, I've got those buckets set up with my wholesale lenders. And you choose your bucket, you get 100% of those basis points. It's as simple as that. Okay. Now, when it comes down to software costs, I use Arrive for my loan origination software, okay? And I would set you up in my Arrive account. You're going to have to pay the monthly fee on that. It's what, $59, $60 a month basically for the loan officer seat, and then $25 a month for the processor seat. So when I go to set you up for that, it'll send you a link where you put your billing information in, and it's basically you got a sub account under my main account. All right, credit reports, you'll go ahead and set up your own credit report account with whatever credit reporting agency that you choose. Same with AUS, I'll be able to set you up as a user underneath my account, so that's all pretty easy. And then the wholesale lenders, I've got an expansive list of wholesale lenders. So you would never be short on that. And if you needed me to bring on a wholesale lender, that's not a problem. I could get a broker package approved and get them on the lender list for you. Now, regarding the real estate company, you're going to want to take a look at that compensation model as well, because I know you've got friends and partners that are realtors and real estate agents out there. And this is an option for you to be able to introduce them to a really good compensation model and also be able to get residual income off of it. Okay, so and I'm going to briefly explain to you how it works, but watch the full video on it, and I go into detail. Not that there's a whole lot of detail because it's pretty simple, but just I'll explain more things in detail, or you could forward that video on to your realtor partners. But essentially, the way that it works is it's a subscription model as well. Same process as you would do, where they set up a reoccurring subscription through my Stripe account, and that subscription is $250 per month. Okay. And then, as far as their closed escrows go, they have a $195 per closed escrow fee that I collect on each demand. Okay. And what that goes toward is my E&O, my software, which for the real estate brokerage, I've got a Real Geeks CRM that I provide, and Suite Assist for the transaction management. And then it's going to cover the auditing and compliance. Okay. But what I allow you guys to do is when you go to refer a realtor into the company, I allow you to mark up that 195 to be able to collect residual income. Okay. So that $195 flat fee, you can mark that up to all the way up to $500. So essentially, you could earn $305 on every escrow that gets closed from the realtors that you refer into the company. It's all set up in my transaction software Suite Assist. I set you up as a referrer in there, and we set up the fee that you're referring the agent into, the per file fee, and that difference at the close of escrow, the demand has instructions to wire that difference over to you. So if you bring them in at $500 per file, you're going to get $305 of that $500 at the close of escrow. And the cool thing is I was just talking to a realtor that I recruited the other day and explaining it to her, and she said, "Well, you know what I'll do with that money is I'll get agents that'll pay my mortgage payment." Her mortgage payment was like $2,700 a month. And I said, "Well, actually, you're making the mortgage payment now. So what I would do with that is, say you got 10 agents that you referred in, that would be $3,050 per month. I would take that full $3,050 per month and add that to your mortgage as a principal reduction payment." And I've got the chart up here. Let me show you what that payment looks like, just so you can see the impact of this. So let's get this calculator up here. This is just something that I grabbed online really quick. And this isn't exactly her scenario, but it's pretty close to it. 725,000 sales price, $605,000 loan amount, interest rate of 4% on a 30-year fixed. Initial payment would be her $3,050 for the 10 agents, and then she adds in $3,050 as a principal reduction payment every month. And we go to calculate this. This would be her original schedule. So there's her P&I payment. That's the amount of total payments that she would make, and she'd pay that loan off in 30 years. Well, with bringing that income in from those 10 agents that she refers into the company, that residual income, she basically here's her total payment. So she's making her $2,800 payment a month like she would be required to do, and then bringing in the principal reduction portion of it. So that comes to $5,938. She ends up saving $300,000 in interest and taking that 30-year fixed mortgage and paying it off in 10 years and 4 months. Okay, so she saves basically 20 years. She cuts 20 years off of her 30-year fixed. And so I was talking to her about that, and she got pretty excited because, you know, until you actually start to see the numbers, you know, you can't really, you know, in your mind put it together what it would actually equate. You recruited 20 agents and you'd have that house paid off in 6 years. Okay, so pretty powerful stuff. And this applies to, you know, if it was a mortgage or an auto loan or whatever the case is, you know, or even retirement. If you look at a compound interest calculator, you could take all that residual income and apply it toward investments, you know, because you're a producing loan officer and real estate agent. Anyway, you're bringing in income. This is residual. So kind of cool to think about it that way. When you actually see the numbers, it's like, wow, this has a big impact, bigger than you would think. So I get the question all the time, "Mike, why are you doing this? I mean, what's the catch? Why is it so cheap?" And the answer is actually really simple. Bottom line is my wife and I live a pretty conservative lifestyle. We like to run with very little, if no debt. We like to keep our overhead as low as possible. Yeah, we buy things that we want and enjoy, but we're mindful of that, and we're not major overspenders at all. So that's it. We live a conservative lifestyle. My wife is on a real estate team. She's got that stream of income coming in. I originate mortgages and I have that stream of income coming in. Plus I do some team building and marketing, etc., etc. So we've got our main streams of income coming in. And when her and I sat down and really started to look at things closer, we were trying to figure out a really strong compensation model. And what we decided was, instead of looking at compensation as being our main source of income, uh, let's look at our compensation models as being supplemental sources of income. And once we started thinking about it along those lines, that changed everything for us, because that allowed us to be able to build a compensation model that is, quite frankly, quite aggressive. So that's the answer to that. We've built a model up to where we could get residual income off of it to support our main income, as well as agents being able and loan officers being able to receive additional income as well. So that's why we do it so cheap, because we wanted to create a win-win and very attractive offering for the realtors and loan officers out there. Now, FYI, I am just at this moment just a DRE broker. Okay. So you would have to have a DRE salesperson's license to originate mortgages through my company. I may change that in the future. I may not. We'll cross that bridge when we get there. But as of right now, you got to have an active DRE salesperson's license or broker's license. So my cell phone, you've probably seen it come across on this video a couple of times. Go ahead and give me a call or shoot me a text, and we can talk about this further. And if we're a good fit, I could get you signed up, within 24 hours and have you up and running. So pretty easy onboarding process. We could get you up to speed pretty quick. So hope to talk to you soon. Let me know if you have any questions, and I hope you're having a nice day. Take care.